But they say that that makes China more dangerous right now. And the reason is, if you were the rising power, if the Ray Dalio theory were correct, and I don't pick on Ray, you could mention a lot of people say the same thing. If that, increasing power theory were correct, if the U.S. were a declining power and China were an increasing power, what's the hurry? You wouldn't invade anything right now. You would just wait. Why not wait until that gap gets bigger? Why not wait until you get relatively stronger than you are today and then do the invasion? It'll be that much easier when you do. But the opposite is the case. By the way, if we know it, the Chinese know it, China's a declining power as of now, or as of very recently. And if that's the case, this is as good as it gets. If you're going to invade, you may not be stronger than the United States, but on a relative basis, this is as strong as you're going to get. It doesn't make sense to wait because you're going to get weaker. And if you're going to do it now. There's a lot of historical precedent for this. In 1941, nobody thought the Japanese Navy was stronger than the U.S. Navy. But it was as good as it was going to get because FDR was ramping up production in anticipation of being in World War II. So the Japanese said, it's now or never, and they went for it at Pearl Harbor. And the same thing with Germany in World War I. Nobody thought the German Navy was stronger than the Royal Navy. But again, the Royal Navy was expanding. The Germans were stuck. They didn't have the resources. They said, this is as good as it gets. So that peak Germany, peak Japan, and now peak China is a very dangerous period because it's not that they're superior, but the relative strength is at a peak. And if you're going to go for it, go for it. And that is a danger. When we talk about the rise and falls of currencies, kind of broadly, and I have mentioned SDRs and I mentioned gold. To me, it's a horse race. There are probably 5 or 10 entrants in the horse race, and I talk about all of them, but we'll see which one comes out on top at the end. But it's really important in this discussion to distinguish between a reserve currency and a payment currency, because they're two different things. Now, the reserve currency is a big deal. And you say the U.S. dollar is 60% of global reserves, which it is, but it's not really dollars. It's not really the currency. The People's Bank of China does not have pallets of $100 bills, stacked up in their basement. What they have is a dollar-denominated security. So they have treasury bills and treasury notes, which are denominated and priced in dollars, and you need dollars to buy them. But it's not really the currency that's the reserve, it's the security that's the reserve. And what gives the U.S. dollar its strength in the form of U.S. Treasury securities primarily is the fact that you have a large, liquid, pretty good rule of law securities market that can absorb global savings. Now, if you don't have that, you can't be a reserve currency because nothing to invest in. It won't be the Chinese yuan. Forget it. There's no Chinese bond market of any magnitude. There's no rule of law in China. Nobody would buy a Russian ruble bond. There's no good rule of law in Russia. And it's not just having bonds. Let's just say you started issuing bonds. Well, great. You need dealers. You need primary dealers. You need repo. You need futures. You need options, settlement, clearance, rule of law, hedging techniques. You need a whole infrastructure that takes, at least 10, maybe 20 years to build if you set out to build it. The U.S. Treasury market's been around since Alexander Hamilton. So we've had 230 years to get this right. So it's going to be very, very difficult to dislodge the dollar as the reserve currency. As a payment currency, that's completely different. When we were kids, we could use, baseball cards and bottle caps if we wanted to. And basically anything that I want to tender that you're willing to accept is a potential payment currency. Now here, there is a lot more ferment, if you will. The BRICS, that's, Brazil, Russia, India, China, South Africa, but they now style themselves BRIC Plus. So when they have their meetings, they invite Argentina, Iran, Turkey, and others. They are working on a new commodity-backed currency that they would use for trade between and among themselves. The Shanghai Cooperation Organization, Russia, China, and some of the Central Asian republics, but again, they're welcoming new members, including Pakistan and others. They're working on this. There's something called the Eurasian Economic Union, which is kind of Putin's answer to the European Union. Same thing, they're working on a new payment currency. Comrade Xi Jinping from China is in Saudi Arabia as we speak, meeting with the Crown Prince and the King Salman, and MBS, Mohammed bin Salman, to talk about, a lot of things, but included among them, would the Saudis be willing to sell oil for Chinese yuan? Again, I'm not saying it's a reserve currency, it's not, but as a payment currency or something you could swap in the markets for other kinds of currencies, yeah, that's entirely feasible. So that's going on around the world. And one of the things that's driving it, this was happening anyway, but one of the things that drove it was the U.S. sanctions, and the EU sanctions on Russia, which are a complete blunder. I actually teach financial warfare at the U.S. Army War College, and it's a seminar style. I get an elite class of about 11 or 12. They're lieutenant colonels, Navy commanders, full colonels, all branches, State Department, CIA, and others. But it's a small group of about 12. They're the future big brains, future national security advisors and so forth. And when I taught the class in April, not far from the start of the war, I said, these sanctions are going to fail. I said, it's going to be worse than fail because they're actually going to backfire and hurt the United States more than it hurts Russia. And there was some skepticism in the class, and I welcome that, and I think it's good. They should express that. But I was exactly right. The Russian ruble today is significantly stronger than it was at the beginning of the war in Ukraine. Remember Biden running around, we're going to destroy the ruble. The ruble is stronger today than it was then. Russia has not lost oil sales. Whatever Western Europe doesn't want to buy, India's buying it, China's buying it. India never bought into the sanctions. They're friends with the United States. They're a democracy. But they're like, hey, this is not our fight, and we're going to buy all the oil from Russia that we can get. So it's had very little impact on Russia, some, but not a lot. It's been awful for Western Europe and the United States. They ran around and they seized all these oligarch assets, townhouses in Belgravia, yachts, we got all this stuff. We're taking all this wealth away from the oligarchs. Putin should send Biden like a handwritten thank you note. He hates the oligarchs. We're doing Putin a favor by taking down the oligarchs. Putin's support, he never wanted to take these guys on because they were somewhat powerful. But what he said was to the oligarchs, this is 20 years ago, you can keep your wealth, but keep out of politics. Don't get in my way. And they put Khodorkovsky in jail. There's the head of Yukos. He's been in jail ever since because he didn't get the memo. But now it's even better than that because we're destroying the oligarchs. And actually, some of the oligarchs are taking the wealth back to Russia as a safe haven. Putin's strength is the military, the intelligence, the Orthodox Church, and everyday Russians. Those are the four pillars of his strength. The oligarchs are not part of it, so that doesn't affect things one way or the other. But just look at energy prices in Europe. They're going to freeze in the dark this winter. It's already happening. The Germans are running around saying, we got our reserves up to 100%. And, natural gas reserves up to 100%. Well, that's true, but they don't tell you that the reserves are only 20% of the requirements. So notice they have 100% of 20%. They don't have the rest. And it's not coming from anywhere, not anytime soon, not for years. And we all know what's going on with energy prices, home heating prices in the United States. This is feeding the inflation that's making people poorer. And there's more to it than that. But the point is, these sanctions have been a complete disaster and will remain so. And Biden said, we're not removing the sanctions until Russia leaves Ukraine. Well, I got news to the president. Russia's not leaving Ukraine. You could have had that deal before the war. There's never been a war that was easier to prevent. But the U.S. wanted the war. Victoria Nuland and Tony Blinken, Jake Sullivan and Susan Rice and all the other warmongers in the White House, they wanted the war. They got it. Now, good luck. Well, they did in advance. They anticipated this. Elvira Nabiullina, who's the head of the Central Bank of Russia, I describe her as the only central bank in the world who knows her job. She built Russian reserves. 20% of Russian reserves are in gold. Round numbers about 500 billion, a little more, actually about 600 billion of reserves, of which over 100 billion, about 120 billion are in gold. So they anticipated this. And going back to your earlier question, Trey, about why are these other countries looking for ways out of the dollar? We put sanctions on the Central Bank of Russia. Now, I don't want to debate the war in Ukraine. I will, if you like, but that's a separate debate. But my point is, the world was shocked. It's like, hey, it's one thing to sanction titanium exports or something. You froze the reserves of a central bank. So countries like Turkey, China, Saudi Arabia, they're watching this and saying, hey, what if the U.S. doesn't like something we do? What if they don't like us next year and they freeze our reserves? We better get out from under the dollar before that happens. And one of the ways to do that is gold. I mean, buying German bonds doesn't put you much further ahead because Germany's kind of a vassal state of the United States when it comes to this until they break away. But gold does it. Gold isn't an alternative. Crypto's not going to come to much, but central bank digital currencies will. That's different. They're not cryptocurrencies. They're not recorded on a blockchain. The ledger is maintained by the central bank or the treasury, finance ministry, as the case may be. They're definitely coming. They're already here in some places. Coming soon. The U.S., Biden has signed an executive order accelerating that path beyond the research, the R&D phase into a pilot program that it will be coming very soon. And that is the last step in the totalitarian agenda, because they'll have to do two things at once. They'll have to bring in the CBDCs, but also eliminate cash. Because if you don't like central bank digital currencies, you'll just say, well, okay, I'll get a big pile of cash and pay cash and heck with that. So you got to get rid of cash also. But once you do, you're now in the total surveillance.